California RSU tax does not stop when you leave the state. If your restricted stock units were granted while you worked in California and they vest after you move, California still taxes part of that income. The rule comes from Franchise Tax Board Publication 1004. For a non-resident on the vesting date, California taxes the wage income to the extent services were performed in California from the grant date to the vesting date. That measuring period is the whole point. It runs from the grant date to the vesting date, not from the date you moved. The calculation itself is a workday ratio. Divide your California workdays during that period by your total workdays during that period. Then multiply the award income by that ratio. Publication 1004 gives a worked example. 700 California workdays and 300 workdays in other states. 1,000 total workdays. The ratio is 0.70. So 70% of that award is taxable by California. The authority is California Code of Regulations, Title 18, Section 17951-5. Here is the part that surprises people. Each vesting tranche carries its own allocation period. A tranche that vests 2 years after you move can still carry a large California share because much of the service behind it was worked in California. Stock options behave differently. A non-statutory option is measured from grant to exercise, not from grant to vest. So workdays outside California keep diluting the ratio right up until you exercise. Withholding is a separate system from liability. California applies a flat 10.23% to bonuses and stock options. The top California rate is 12.3% plus 1% on income above $1 million. That gap is where an unexpected balance due comes from. There is good news here. This obligation is finite, and it is calculable in advance. Once every grant has fully vested and no allocation period reaches back to a California workday, the trailing tax ends. Appreciation after the vesting date is sourced to your new state of residence. For a Florida resident, that means no state tax on the gain. Keep the grant agreements, the vesting schedules, and the travel records. The ratio is only as strong as the day count behind it. This is general information and not advice for your situation. Tax expert today.